everyone, the demand for electricity is exploding in India. Be it growing demand for electricity-intensive appliances like ACs, refrigerator, washing machine, be it increasing adoption of electric vehicles, be it India's push for manufacturing and industrial growth, or be it the exponential growth and demand for data centers due to rise of artificial intelligence and the digital economy. To meet this demand, India is building its power generation capacity at a record pace, especially in renewable energy. Solar parks in Rajasthan, wind farms in Tamil Nadu, hydro projects in the northeast, all are scaling rapidly. India is targeting 500 gigawatt of non-fossil capacity by 2030. Now this power generated in remote deserts and hills is useless until it reaches your home, your factory, your EV charger. That's where power transmission and distribution comes in. Think of it as the highway system for electricity. Towers, high voltage lines, substations, last mile grids, carrying power safely, efficiently and reliably. That's where I was reading some research reports regarding the growth potential in the power T&D sector of India and found it quite promising. Experts estimate India needs to invest 2 to 3 lakh crore rupees just in transmission infra by 2030. This include green energy corridors, interstate, high voltage direct current lines, smart substations, urban grid upgrades and so on. That's a huge opportunity for EPC players and transmission infra companies. So while researching, I came across an emerging player in this space, Transrail Lighting, involved in building transmission towers, electrification projects and smart infra across India and beyond. This company recently got listed in December 24, and when I went through the investor presentation of the company and management con call, I found that company is eyeing to grow its revenue by around 23 to 25% in FY26, and its valuation looks quite decent at a PE below 30. That translates to a PEG ratio of around 1. So in this video, I thought of discussing Transrail business and key growth opportunity along with key risk in the growth thesis. But before we proceed further, let me clarify that the idea behind this video is to share business that I find promising. But make sure that you do your due diligence before investing your money. Alright, let's get started. To begin with, if you look at the history of Transrail, it has got legacy of 4 decades. So it started its operation in 1984 with foundation work on 132 kV line. So first of all, company has got massive experience. Then in 87, it started 400 kilovolt transmission line. Then in 93, it set up the factory, 2007, factory for conductor manufacturing and so on and so forth. 2024, company got listed on the exchanges. Next, if you look at the business breakup, it has got a quite diversified business portfolio where major business is power transmission and distribution. So more than 90% of company's revenue comes from this particular segment. That include transmission line EPC work up to 1200 kilovolt, then AIS and GIS substation EPC up to 765 kilovolt, manufacturing of towers, conductors, monopole, then underground cabling, rural electrification, then 800 kilovolt high voltage direct current lines and so on and so forth. Next segment of company is your railway business, where it is into your railway infrastructure solution for large scale national project that include overhead electrification, earthwork, signaling and telecommunication service, track linking and so on. Apart from this, company also has exposure in poles and lighting EPC work, then civil construction that include bridges, elevated roads, tunnels, cooling towers, and it has also forayed into solar EPC work. Next, if you look at the order inflow and unexecuted order book, that will give a fair idea about the business breakup. So this is the order inflow for FY25, where company did 9,680 crore of order intake, which is growth of 120% year on year, where 91.3% is from power T&D business, and then you have got small business from railway sector, then civil and pole and lighting is there. Now the business breakup between domestic and international. So domestic is 65%, international is 35%. Next, if you look at the unexecuted order book, which is to be executed over the period of time, it includes 55% domestic order and 45% international. So please understand, it has got business in India as well as outside India. We'll look at the geographical wise breakup. Within that, 92% is from power T&D and rest is from railway, civil, pole and lighting. Right, and at this point in time, company has got 14,551 crore of unexecuted order book that has grown 44% year on year. Moving on to the global footprint, Company has its presence in 59 countries. That include 27 countries in Africa, 16 in Asia, 4 in Europe, 7 North America and 5 in South America. And then if you look at the industry overview, we have already discussed there's a lot of potential. What are the key growth drivers? As discussed, renewable energy expansion, which is the target of 500 gigawatt of renewable energy capacity by 2030, which is one of the biggest opportunity in India. Then rising power demand, right? Because India's power demand is projected to hit 708 gigawatt by 2047, requiring over 2,100 gigawatt of installed capacity to meet future needs. The next driver is grid modernization, where the focus is to improve the efficiency for the entire grid. Then of course there is a policy push from government as well as their global grid investment surge, right? So these are the drivers, and you can go through the details like what is the expected growth across the divisions, which include your power transmission and distribution EPC market, transmission and distribution lines, and so on. Moving on to the next very important aspect, which is the leadership. And that's where what I really liked is the MD and CEO, Mr. Randeep Narang, has got massive experience. So he has got over 35 years of experience, and please note that his last assignment was with KEC International, so a very leading player in the space, where he was the president of an international market in T&D solar and cable segment. Right, so leadership is looking very, very efficient, and of course, if you look at the other leader also, there's a massive experience in the industry. Next, moving on to the financials aspect, if you look at the P&L table, look at this. Company sales has grown consistently since 2020. We have data only since 2020. The growth has been excellent, and if you look at the net profit also, from 98-65 crore all the way to 108, then 233, and now 327. So consistent growth across top line and bottom line. Company has been able to maintain 13-14% kind of operating margin. Moving on to the other important KPIs like ROE, ROCE, look at this. Very good ROE and ROCE, so profitability is also good. Debt to equity is also well under control. Company has got decent CFO to EBITDA also, so company is generating decent amount of cash from operation. And the most important aspect, that company is currently trading at a P ratio of around 28-29. So considering the growth in the past and the guidance, which is nearly 23-25% growth, I think the valuations are quite reasonable. In fact, there's a scope for PE re-rating in Transrail lighting. Now, before I proceed further, if you're a long-term investor and do not get enough time for research, that's where I try to add value with this one weekly video series. This is an exclusive series only for long-term investor, where I share my own investment strategies along with tracking more than 200 quarterly results. See, this is very, very important, because when you track the quarter results, when you read the con call, you get a fair idea about which companies are doing well, where is the buying opportunity, and that's where I try to share this insight with you all. So you can explore this on my website, or if you want, you can also explore the join button of my YouTube channel. Moving on to the key growth drivers for the company, I think there are a lot of drivers. Of course, there's a fully backward integrated manufacturing facility that has a capacity to manufacture key components of your towers, conductors, poles to reduce dependency on third-party supplier. Apart from this, company has got a massive order book with healthy balance of international and domestic client, and has consistently witnessed growth over the past few years. Of course, there's a massive track record of established presence and growth in transmission and distribution vertical through implementation and execution skill. Apart from this, company has got very good financial performance. The promoters are quite experienced, and they've got strong in-house designing, engineering, and power testing facility. Next, I was going through the company's con call, where, like I said, management has given a guidance of 23-25% growth over the FY25 number. So FY26, you can expect the revenue to grow by 23-25%. As far as margin is concerned, they have retained the similar growth of margin, which is between 12 to 12.25% EBITDA growth. So this is looking quite interesting, because A, the growth is very promising. The sector itself has got a lot of tailwind. And the third factor, I believe, is the valuations are quite fair, because at this point in time, majority of growth companies are commanding a very high valuation. One of the reasons I believe the valuations are not that expensive for Transrail Lighting at the moment is because it has got recently listed 6 months ago, and then we witnessed a slowdown, and that's where I think there's a scope for valuation re-rating, provided there's a good recovery in Indian stock market the way it is moving. Apart from this, by the way, recently they've received order worth 534 crore. Right, so companies winning a lot of orders that reflects there's a strong tailwind in the industry. But before we close this video, I just want to discuss the key risk that you should keep in mind. See, no business is immune to risk. You'll always face risk no matter what, right? So what are the risks that you should keep in mind? First is customer concentration. Please understand that they've got a lot of dependence on government entities, and that's where what happens is if there's a delay in order or payment, it can impact the cash flow of company. Second is it's a very working capital intensive business, right? And that's where you've got long payment cycles and high upfront cost, and that can result in liquidity constraint. So they often need short-term borrowing. Apart from this, obviously in EPC business, there's an execution risk that include labor issues, labor shortage, local delays, so on and so forth. Fourth risk is raw material volatility, margin vulnerable to swings in steel, aluminum, zinc prices. Obviously, they pass it through, but then there's a partial protection only. Next is intense competition. This is again a massively competitive space that includes giants like KC, Kalpataru in L1 contracts. Of course, that puts pressure, but then management has guided that they would retain the margin of 12 to 12.5% for FY26. And last is policy dependence, where the business is linked to government infra and electrification budgets. Obviously, the biggest valley why we are seeing in power transmission is because there's a massive government push. So this is one of the very important factor. If let's say government in the near future decide to reduce the spend, it can impact the company's growth, right? So you have to keep this risk in mind before taking a call. But I think that this is one company that is really worth studying because, like I said, there's a strong tailwind in the sector and Transrail is looking quite promising. So this is it for this video. Let me not stretch it. All I want to say is this power transmission and distribution sector is looking quite promising. There are a lot of tailwinds. And that is the reason it is worth exploring this sector. And if you get time, do research this Transrail lighting, which I find promising. Let me know what you think about this company in the comment. That's it from my side. I'll see you next video. Till then, take care.